Welcome back to the IRS War Room podcast. This is where we break down real federal cases and discuss real tax crimes, IRS criminal investigation cases, PPP fraud cases, and the kind of financial schemes that every tax professional, business owner, and entrepreneur needs to understand. Now, I'm going to warn you that today's case is wild, okay? This is not just a PPP fraud story. This is not just a tax fraud story. This is a story of a man who allegedly created an entire fantasy world on paper. And you're going to find out why I say fantasy world in a minute. So this man created a fake African gold mine. Let that sink in. He reported millions of dollars in fake losses. He got a $3.3 million Treasury check from the United States Treasury, a nearly 10 million PPP loan application, 493 alleged employees, and nearly 4 million in monthly payroll. Now, he also had fake payroll reports. Listen to this. That listed real celebrities as fictional characters as employees. Then came the spending. So he had a mansion, a Lamborghini, a BMW, a Range Rover, and a 72-foot yacht, a business, and he even had plastic surgery. We're just getting started. So by the time this case was over, federal prosecutors said that approximately $13 million had been fraudulently obtained from the government. And the center of it all, the person that is the center of it all, his real name is, and I'm going to try to say his last name. I think he might be African. I'm not sure. But Carl Delano Turgabi. I'm going to call him T. So I'm going to reference him as T throughout the rest of this podcast. So today we are taking this case inside the war room. We're going to talk about how it got started. How in the world did he get all that money approved? Where did the money go? How did the investigators uncover all of this? That's the most exciting part for me. And most importantly, what should tax professionals learn from this case? And you as a business owner and taxpayer. This case, everybody can learn something from this case that we're about to cover today. Because this isn't just entertainment, this case is a warning sign for everyone that is thinking about doing fraud or have done it in the past. So let's get into it. The defendant in this case is Carl Delano T. I'm going to call him T. He's from Marietta, Georgia. So he's right around the street from us. Right away, when I first read this, I was like, wow. And you're going to be the same way. Because in financial fraud cases, identity and details matter. He had a few different identities. He has also known as throughout his case. So in financial fraud cases, names matter, social security numbers matter, dates of birth matter, business records matters, tax return matters, and according to the government, identity manipulation was part of this story. So the federal prosecutor said that T submitted tax returns using different identifying information, including different social security numbers and different dates of birth. Now, for people who do not work in tax, that may sound like a small detail. But for tax professionals, that is a flashing red light for us because the tax system is built around identity. Once different identities are being used, the question becomes, was this a mistake? Was this negligence? Or was this an intentional attempt to manipulate the system? In this case, the government said it was intentional. And the first major piece of the scheme involved tax returns, not PPP yet. So this actually started as just tax fraud. We haven't gotten to the Lamborghini or the yacht. Right now, we are going to cover the tax returns because there are multiple levels to this case. So let's talk about the fake gold mine story. Now, this is where the case becomes unbelievable. According to prosecutors, T filed tax returns that falsely claimed that he had millions of dollars in losses. And those losses were connected to his alleged African gold mine called Krimco Industries. Let me say that again. Yes, you heard me right. An African gold mine business. The tax returns claimed that Krimco Industries had generated millions of dollars in losses. The losses were then used to offset earnings. And they became, because of those offset earnings, those caused the losses. The IRS issued a United States Treasury check. That's not a small refund. This was in one check. This wasn't multiple checks. This was one large check. Okay. That's not a normal refund. And that's a life-changing amount of money. Now, imagine the confidence that it takes to file a tax return claiming losses so large that the Treasury sends you a check for more than $3 million. Now, most taxpayers, including me, y'all know I'm a lowercase g when it comes to anything dealing with the government. Most taxpayers are nervous about claiming a few $1,000 in deductions. Most business owners are worried about documentation, and most tax professionals, they won't back up before they file anything aggressive, especially as aggressive as this. But according to the prosecutors, this was not a legitimate loss claim. This was false representation. And once that Treasury check went out, the scheme did not stop. He got greedy. This was an important lesson. The fraudsters rarely stop after the first success. The first success gives them confidence, unfortunately, and confidence creates greed. I see it all the time. And greed makes the next move even bigger. So just days later, on February 16th of 2021, T signed a PPP loan application for the same company, Krimco Industries. The amount that he requested was $9,554, over $10 million. That's what he requested, over $10 million. Now, remember the PPP, the Paycheck Protection Program? It was created during COVID to help businesses keep their employees, right? To qualify, businesses had to meet certain specific requirements. And T certified that the Krimco Industries met those requirements. So he certified that the company was in operation on February 15th of 2020. Remember, when dealing with the PPP loans and any of the pandemic era loans, the date matters because a company generally needed to be operating by that date to be eligible for the PPP funds. So he certified also that Krimco Industries had 493 employees. That's a lot of damn employees. He also certified that those employees had their principal place of residence in the United States. He also certified that the company had an average monthly payroll of nearly $4 million. That's a lot of employees and a lot of monthly payroll. Lastly, he certified that all loan proceeds would be used only for business-related purposes. And you're about to find out what those proceeds were used towards. Now, stop right there. 493 employees, nearly $4 million in monthly payroll for Krimco Industries. That is a massive claim. This wasn't just a little side hustle for T. That is not a small business trying to survive during COVID. That is a company claiming to have hundreds of employees and millions in payroll every single month. Make it make sense. According to the prosecutors, those certifications were false. But it gets even crazier, y'all. That's not it. T also submitted documents to the bank to support the application. Those documents included fake tax returns and fake payroll reports. And those fake payroll reports allegedly listed nearly a dozen celebrities and fictional characters as employees of Krimco Industries. Celebrities and fictional characters as employees, not customers, not references, employees. Imagine being the IRS criminal investigation agent reviewing this file, and you start seeing names that belong on movie screens, television shows, and fictional storyline. This isn't just fraud at this point. This is arrogance, okay? On March 29th of 2021, T received approximately $9.6 million in PPP loan proceeds. At this point, according to the prosecutors, he had access to two major sources of fraud money. First, the $3.3 million Treasury check from the IRS. Second, the $9.6 million PPP loan. So together, it was approximately $13 million. Now, this is where the financial trail becomes very important. Prosecutors said that T commingled the PPP funds with the fraudulently obtained tax refund. That means that commingling means that the money was mixed together. And for financial investigators, commingling does not make the money disappear. It actually creates a trail. Bank records show deposits. Bank record shows transfers. Bank record shows purchases, of course. And bank records also shows who got paid. So people think that fraud is hard to prove because money moves around, but money leaves footprints every time. And once the IRS criminal investigators start following the money, which is how they do their investigations, they follow the money. Every single transaction tells part of the story that they are investigating. Now let's talk about where the money went. Oh my goodness. So according to the prosecutors, instead of using the PPP funds for the approved business purposes, rent, utilities, and stuff like that, he used the money for personal debt and expenses. And the spending was crazy. The prosecutor said that he paid almost $1.7 million for his personal residence. So he was balling. This was for his personal home. Now, think about that from a jury's perspective, okay? The PPP program was designed to protect payroll and help businesses survive. But here, the prosecutors are showing nearly a $1.7 million personal residence. That house becomes more than a house, all right? It becomes evidence, and it becomes an exhibit in trial. Then came the Lamborghini. Yes, he bought a Lamborghini. The prosecutor said that T spent $332,000 on a 2014 Lamborghini. That is the kind of vehicle that kind of announces itself even before you see it. Okay, a Lamborghini is not quiet. It does not blend in. It speaks very loudly. Then there was $120,000 for a 2022 BMW. That wasn't it. He decided he needed a third vehicle. He went and purchased a Land Range Rover for $90,000. So we got a mansion, a Lamborghini, a BMW, and a Range Rover. But the spending did not stop there. Prosecutors also said that he spent $51,000 as a down payment on a 72-foot yacht. Good Lord, 72-foot yacht. Not a fishing boat, not a little weekend speed boat, a yacht. So remember this. This is the money that's tied to the PPP and the tax refund fraud allegations. This is the taxpayers' money. This is how the jury is looking at it. This is the taxpayers' money. This is pandemic relief money. This is money that was supposed to help businesses keep people employed during COVID. The prosecutor said that he spent over $1 million on real estate, trucks, trailers, and to start a new business. That's another thing. PPP funds were not meant to start a new business. It was meant to help the existing business survive during COVID. It didn't stop there. One of the details that the jurors probably will never forget is the plastic surgery. So allegedly, he spent $15,000 for plastic surgery. Now, I don't know if the plastic surgery was for him or it was for a spouse or side piece girlfriend. I don't know who got the plastic surgery. All I know is somebody paid $15,000 for plastic surgery. Now, let's pause right there because this is the kind of case where facts speaks louder than any dramatic commentary ever. You got a fake gold mine. You got fake losses. You got a $3.3 million Treasury check from the Internal Revenue Service. You got a PPP application that has 493 employees. You got fake payroll with real celebrities' names and fictional characters. $9.6 million in PPP proceeds. You got a mansion, a Lamborghini, a BMW, a Range Rover, a yacht, and new business assets, and some plastic surgery. At some point, the paperwork catches up with you. Remember, everything is a paper trail. Now, the spending matters because a lot of people think that the crime is only getting the money. But in federal financial cases, how the money's spent can become just as important. Remember that the spending shows intent, the spending shows motive, the spending shows personal benefit, and the spending helps prosecutors tell the story. So if the PPP money is supposed to be used for payroll, rent, utilities, and approved business expenses, but that money goes towards luxury cars and a yacht, that becomes powerful evidence that will be used against you. Now, if the tax refund money is obtained through false losses, then used for personal purchases, that becomes powerful evidence. So every purchase creates a record, okay? The home closing documents, that creates a record. The vehicle purchases creates a record, especially if you got all this stuff in your name. Bank wires creates a record. Insurance records exist. Titles exist. Dealership records exist. Loan documents, invoices, receipts. Federal agents do not guess. They don't have to guess. All they need is to subpoena for the records. They reconstruct the timeline. Remember this. They trace the money from the government to the bank to the purchase. And this is why I always say the money always tells the story. And that is why the government follows the money, the shmoney. Okay. Okay. Let's talk about the IRS criminal investigation before I end. So a lot of people always hear that the IRS, when you hear the IRS, all you think is audit, right? But honestly, the IRS criminal investigation is different. A civil audit asks, can you prove the deduction? Can you substantiate this loss? Can you verify this income? But when it goes criminal, the criminal investigation asks, did you lie? Did you intend to deceive? Did you create false documents? Did you move money to hide the fraud? Did you knowingly submit false information? That is a totally different game. Civil and criminal, totally different. Now, once the IRS CI is involved, the issue is no longer just about the penalties and interest. Now, we are talking about search warrants, subpoenas, bank records, witness interviews, indictments, trials, forfeiture, and unfortunately, sometimes even prison. So in this case, the prosecutors were saying that this was, they weren't saying that this was a mistake. They were not saying that someone misunderstood the PPP rules. They were not saying that this was a bookkeeping error. They said this was a whole fraud scheme. False tax returns, false payroll reports, false certifications, false business representations. And the jury agreed. So when the case went to trial, I'll tell you what matters in trial. So this was simply someone, it was not simply someone quietly pleading guilty and disappearing into the system. A jury heard evidence. They heard about the tax returns. They heard about Krimco Industries. They heard about the alleged African gold mine losses. They heard about the 3.3 million Treasury check. They heard about the PPP loan application, the 493 employees, and the nearly $4 million PPP loan check. They also heard about the mansion, the Lamborghini, all the cars, the plastic surgery, and after hearing all the evidence, they convicted him. So remember, the document tells the story. Let's bring this into the war room for a second, because this isn't just about tea. This is about tax professionals, bookkeepers, payroll companies, consultants, business owners, and preparers that are watching this episode. Here's the question. What happens if a professional helps create false documents? What happens if a tax preparer, files the returns with numbers knowing that they are not real? What happens if the payroll company produces reports that are not supported by the actual payroll? What happens if someone helps a client submit a PPP application based on fake employees, fake wages, and fake business activity? The government does not stop with the person who received the money. They follow everyone who touched the paperwork. They ask, who prepared the return? Who created the payroll report? Who submitted the application? Who certified these numbers? Who received the fee? Who knew this information was false? Why is this documentation? This is why the documentation matters. This is why your signature matters, your license matters, and your reputation matters. A client's emergency is not worth your freedom. I can promise you it is not. A client's fraud, it is not worth your career. A client's lie is not worth your name being listed in a federal indictment, because that's exactly what's going to happen, because they are going to snitch on you, unfortunately. One of the most interesting parts of this case is the psychology of it all. Fraud usually starts with the story. The person tells the story to the government. They tell the bank another story. They tell themselves another story. They convince themselves that they are smarter than the system, unfortunately. They will convince themselves no one will check behind them. They will convince themselves that the government is too busy and they won't get caught. And then that first check clears. The first check is dangerous because now the person believed the lie worked. So they get bolder. The numbers get bigger. The documents get sloppier, unfortunately. The spending gets louder. And eventually the fraud becomes too big to hide. And that is exactly what happened in this case. It wasn't just greed. It was escalation in this case. Now, for training purposes for those tax professionals, let's talk about those red flags real quickly. A red flag, number one, was a massive refund based on unusual business losses. When someone claims millions of dollars in losses from a business like an African gold mine, that requires serious documentation. Red flag number 2 for me was the different identifying information, the different social security numbers, the different dates of births, the different names. This is not something a professional should ignore. Red flag number 3, a company claiming hundreds of employees without normal supporting records. If a company had 493 employees, there should be a massive paper trail. Payroll tax returns, there should be W-2s, state unemployment filings, there should be workers' compensation records, HR files, bank payroll debits, employee benefit records. There should be a lot of records with that many employees. Red flag number 4 was a nearly $4 million in average monthly payroll. You got to be a Fortune 10 billion company to make nearly $4 million in average monthly payroll. That's a lot of money. That does not make sense. If you're going to do fraud, do something, make it make sense a little bit at least. But he went all out. T went all out. That number should match the payroll tax filings and the bank activity. Red flag number 5 was the fake payroll reports. If the payroll list includes celebrities or fictional characters, that is not a gray area. This is fraud. Red flag number 6 was all the luxury spending shortly after receiving the government funds. Like no need for me to go over everything that he purchased again, but he really balled out. So the takeaway from this case is fraud does not have to be sophisticated to be dangerous. Sometimes it's just bold. $3 million Treasury check is not invincible. PPP fraud cases are still alive, y'all. Just because COVID is over does not mean the investigations are over, because they are really just really getting started. Make sure you are documenting everything. Fake documents can turn into a civil issue, and it can also turn into a criminal issue. Lifestyle spending becomes evidence. All of it, the houses, the cars, the yachts, the plastic surgery, everything that you all are posting on social media, the government is watching. They're taking screenshots of your social media profiles, and those screenshots are becoming exhibits in court and in trial. Tax professionals, you all must protect yourselves. Do not file what you cannot support, okay? Do not certify what you cannot verify. Do not let a client's fraud become your criminal exposure, because it's not worth it. And to the business owners that are watching this, don't play with the government's money. Please, I beg you, do not play with the government's money. Do not lie on tax returns. Do not create fake payroll. Do not invent employees that you know you don't have. Do not claim business losses you cannot prove. Do not think the IRS will never come back and review the file, because they will. The government moves slow. And I think that's why a lot of people think that they've gotten away with it, because the government moves very slow. Well, they've extended the statute of limitations, okay? They move slow, but they might move slow, but they move with records. And when the documents do not match the money, then the truth starts to coming out. So this case, like many others, started with paperwork, the false tax returns, the false losses, the false business claims, the false payroll, the false certifications, but it ended up in the federal courtroom. And this is how financial fraud works. It may begin quietly on paper and civil or administrative, but it ends very loudly, and it is very public. T's case is a reminder that every number tells a story. Every tax return, every application, every bank account, and every purchase. And when stories do not match, investigators start asking questions. Fake gold mine, the Treasury check, the 493 employees, and so on. So the biggest lesson here, and I'm closing out, the biggest lesson here, I feel like I just gave a church sermon and we're getting ready to close in prayer. The biggest lesson here is fraud may be luxury for a moment, but I promise you that paper trail can and will cost you your freedom. I'm Melinda Tolbert. This has been another amazing episode of the IRS War Room podcast. Please protect your business, respect the paperwork, and never forget the money always tells the story. Let me know what you think in the comments. I am looking forward to chopping it up with you in the comments about this story. If you have any questions, put them in the comments, and I will see you all next week. Peace.